So welcome to this series on accounting standards. Now in this series of videos, I'll be discussing with you some of the core things, the core concepts that you need to understand on various accounting standards. So you make sure that you stay tuned with me, you subscribe to my YouTube channel, you follow me on Instagram, like my Facebook page, and also follow me on SoundCloud, because I'll be releasing these lessons so that it will help you to understand these standards. So what I want to touch in this video is IFRS 5. IFRS 5 has to do with assets held for sale and discontinued operation. So this is an accounting standard that is used to account for how organizations will recognize asset held for sale and discontinued operation. But before then, let me quickly tell you about what this standard is about. Now, this standard is actually a bit related to IAS 16 because it relates to assets and then businesses. Now, how does it relate to IAS 16? Because you see, when we buy an asset and we are using the asset for business purposes, that means the asset will be treated under non-current assets in our statement of financial position, and we are going to be calculating depreciation for the asset for the year or for the period. But immediately we decide that we are not going to be using the asset for business purposes again, and we want to sell the asset. That means that we have to de-recognize the asset as a non-current asset in the balance sheet into a current asset. Okay, so we need to de-recognize it from being a non-current asset and recognize it as what? A current asset. Now, once we do that de-recognition, meaning that that asset will not be depreciated any longer. So that is what you need to understand about that. So IFRS 5 accounts for how we need to, the conditions that must be met before an asset can be recognized as held for sale or discontinued operation. Now, as the name suggests, held for sale assets, meaning that we are holding the assets and we are ready to sell the assets. Now, a discontinued operation can be like a whole subsidiary of a company that we want to sell off, or a segment of a business that we want to close and sell all the assets. So when a company makes a decision, or when there is an asset or there is an operations of a business that a business discontinues and it wants to sell the business or want to sell those operations, then the way we account for it is as according to IFRS 5. Asset held for sale and discontinued operation. But then we don't just get up and say that this asset is held for sale or discontinued operation. We need to look at the criteria for the recognition of assets held for sale and discontinued operation. Now, as I mentioned in some other videos when I was talking about how you pass financial reporting and corporate reporting, I made mention of the fact that when you take any accounting standard, you have to look out for in relation to the recognition criteria, the measurement basis, and then the disclosure requirements. So these are the three things that you need to look out for in every accounting standard you pick: the recognition criteria, the measurement basis, and then what? The disclosure requirements. So what is the recognition criteria for assets held for sale and discontinued operation? In other words, what do we have to see? What should be present before we can conclude that this asset qualifies to be held as held for sale or accounted for as held for sale or discontinued operation? The recognition criteria, it's actually can be remembered when we use the symbol SEL. Okay, so held for sale, and we are using the acronym, sorry, not a symbol, acronym SEL. So SEL, the S simply means that management must have an intention to sell the assets. In other words, if at the end of the accounting year, management hadn't decided on the selling of the asset, that means that asset cannot be seen as a held for sale asset. Or at the end of the year, or at a point in the year, the company decides that, okay, because of economic conditions, they are halting an operation, or they are not going to be using a certain asset. So they put it in what we call a work condition book, a workbook condition, so that when the economy becomes better, then they can use the assets That means that management doesn't have an intention as at the date to sell the assets. So such assets cannot be accounted for according to IFRS 5. Rather, since we have halted operations and we intend to continue with the operation, when the economy gets better, then we have to continue to what? Depreciate the assets or account for the assets as per IAS 16, and also test for impairment if we have to test for impairment according to IAS 36. So S means that management must have an intention or must have decided to sell the assets. So that is where the S comes from, sell. A means that not only should we decide to sell the assets, but the asset has to be available for sale. So that is the second thing. So assets must be available for sale. Because if you tell me that you want to sell your laptop to me, but then your things are still on the laptop, you are still using the laptop for your work, you are still using it for your business, then the laptop is not available for sale. What we are saying here is that, meaning you have transformed everything from your laptop, the laptop is just there, so that if I come today and give you the money, I carry the laptop and take it away. So the second recognition criteria is that the asset must be available for sale. So if management makes a decision to sell the assets, but they are still using the assets, that means the asset is not available for sale and hence cannot be accounted for according to IFRS 5. Then the third thing is L. The L simply means management must have located a potential buyer and is even making in negotiation with the buyer. So management is looking for a buyer, searching for a buyer, or has even found a buyer and they are advanced in some negotiations. So that is the third recognition criteria. Not only must we decide to sell the assets, not only should the asset be available, but there should be some advertisement, and also we should be looking for what? Potential buyers of the asset. That is the third recognition criteria. Then the last recognition criteria is E, which means the company or the management must expect to sell the assets in less than 12 months. That means in the next accounting year. So that is the E aspect there. So these four criteria must be met before we can recognize an asset as held for sale or an operation as a discontinued operation. It is very important. So management has decided they want to sell their operations, they want to sell the assets. The operations, the business they want to sell, or the asset they want to sell is available for sale, and then they have located a buyer or they are aggressively looking for a buyer, and then E, they expect the sale to take place within the next 12 months. So these are the recognition criteria for asset held for sale and discontinued operation. Now, if in the middle of the year the asset has not been sold, or the company makes a decision and as at the end of the year, preparation of draft financial statement, the asset has not been sold, then because it has been derecognized as a non-current asset and is now a current asset, the company tests for impairment. That is what we refer to as subsequent measurement of the asset that have been recognized as held for sale and discontinued operation. So this is a snapshot of what you need to understand when it comes to IFRS 5. Asset held for sale and discontinued operation. So I'll see you in the other video where we talk about some other accounting standard. Remember, comment below with questions and I may be answering some of your questions in the next video that I will do.